Hi, good afternoon. You're watching Closing Trades right here on ET Now, and it's not as much here as it was the same case, same time yesterday. So we've just been dragging our feet and have been largely very, very quiet and sedate after that bumper move from the indexes, or rather the overall markets yesterday. But the good thing is, for the better part of today's trading session, we've attempted to latch on and stay put at that 25K mark. That's how we started, and hopefully that's where we should manage to close in for the week as well. But what's looking good today, it's cap goods all the way. And cap goods being the larger umbrella, you've got the defense names holding out. What's actually joining the party now is the railway stocks as well. And to think of it, it's these two sectors which back in October saw the first signs of a correction creeping in. Other than that, it's the usual suspects. Some of the liquid names like an Adani Enterprises, etc., looking good. Zomato is pushed up a little bit. Some of the stocks like a Bajaj Auto from within the two-wheeler pack are seeing some smart follow-through from yesterday. Angel One is holding out well. Crompton is seeing a good reaction to its earnings, 7% higher over there. But what's not participating today is some of the large caps like an L&T, Axis, Maruti, M&M, absolutely quiet in trade. Bajaj Finance is a little bit tempered. Technology still, continues to be a no-show in the rally. And today, of course, what's weighing heavy is one of the leadership names of the rally in the market, that's Bharti. But that's only because of that block deal, which is why you're seeing pressure on the stock. Remember, Singtel sold about 1.25% stake in Bharti for about $1.5 billion, or at least that is what the intimation is so far, that's what the block deal would entail. In fact, before we bring on board our experts, let's take it across to Ansh and find out how many exits one has seen from promoter entities in Bharti so far.
Well, Singtel has offloaded 1.2% stake in Bharti Airtel through block deal. Now, the Singapore-based telecom major has sold nearly 7.1 crore shares worth 13,221 crore at 1,814 rupees per share. Now, with this, Singtel's holding in Airtel now stands at around 28.3%, down from its initial 29.5%. Interestingly, this comes months after Sunil Bharti Mittal, through Indian Continental Investment, also sold around 0.84% stake in Feb, raising nearly around 8,485 crore to fund new opportunity. While back-to-back, a stake sale might appear a bit cautious on the surface, but brokerage firm Centrum has maintained a positive view. It says that Singtel has sold this stake to reduce debt at its own level, and they have retained a buy rating on the stock with a target price of 2,168 rupees, which is 20% away from its current level.
All right, thank you so much for that, Ansh, for putting all of that into context for us. We have our guests now joining us on the show. We have Harsha Upadhyay, CIO Equity at Kotak AMC. Hi, Harsha, good afternoon. And we are almost at the fag end of the earnings season. No doubt, most of the part of 2025, we've only focused on what exactly is happening in the United States, the commentary coming in on tariffs. But yes, earnings play a crucial role. And what do you make of the earnings scorecard now?
Good afternoon. Clearly, when we started the earnings season, the expectations were quite muted across the board. Whether you look at large caps, mid caps, across the board, the expectations were quite muted. Off late, we have seen a little bit of a better earnings trajectory coming in from most of the results that have been announced in the last week or so. But overall, I would say that we are broadly in line with expectations. Maybe it's slight bit of improvement versus the muted expectations that the street had at the beginning of the quarter. Overall, I do not think that the earnings season by itself is going to be any trigger either on the positive side or on the negative side for the market as of now.
Hi, afternoon. What's it that you're making of the overall market, though? Seems like it's picture perfect. The good news couldn't get any better than here. But do you think in terms of valuation, much of the positives are already baked in? How much more headroom could the market have from these levels?
You're right, Aisha. I think a month back, there was complete panic in the market. And from that level, it swung to complete euphoria, one could say. I think the reality is somewhere in between. And as of now, the valuations are quite on the higher side, I would say. Even the large caps probably are at a premium of about close to 15% to their long-term averages. And of course, mid and small caps are even more expensive. While the overall sentiment, the mood, and the liquidity also seems to be quite positive, one should keep an eye on valuations. I think as markets move up from these levels, if there is no further earnings support that comes in, then I think it's going to be difficult for the markets to sustain those levels once the sentiment changes or the liquidity kind of cools off. And that's what probably we need to remember.
Harsha, what one is seeing is that the completely disowned segments of the market as well are now making a comeback. Look at what's happening within railway stocks, for instance. Look at the PSU pack, the larger periphery, other than just banks. They're also now beginning to participate. Tell me, where is it that you find value or bottom-up opportunities right now?
Aisha, with markets trading at probably almost like 22 times 1 year forward earnings, it's very difficult to find attractive valuations across the board. There are probably very few stocks which offer you that kind of valuation comfort. However, if you look at our portfolios, we have been focused more on domestic businesses over the last a few quarters, and of course that positioning has played out well. And also we believe that going forward for the next couple of quarters, still for exporters and global oriented businesses, the situation is going to be quite hazy. So to that extent, most of our exposure would be in domestic businesses, including financials, for example, which is a large exposure. Other than that, we have been positive on cement, telecom, power, oil and gas, all of these segments, which have very few linkages with global markets. And if at all, that's been a positive. For example, the crude oil has corrected quite a bit. That should be a positive for at least the downstream oil companies in our view.
What's on your watch list? What I'm trying to get to is this the time that one needs to tread with caution? I understand that you can't put fresh money to work, but do you need to profit take at these levels? Is there something which could actually spoil the party for the markets from here?
I think even now we have not seen the last of the tariff announcements. So to that extent, I think it's still wide open in terms of what's going to happen to overall tariffs for the country and also to specific sectors. So to that extent, I think we need to still watch out that part of the news developments. As far as the valuations are concerned, as we discussed earlier as well, they have moved up and they have moved up quite rapidly. So to that extent, at higher valuations, obviously, you need to be cautious and mindful of those valuations as well. So overall, I would say if you just look at the mood and the sentiment, things are fine. However, we need to keep valuations also at the back of our minds and start taking corrective actions if required from those segments where the valuations are relatively more expensive.
Frothy to you, Harsha, right now? Where is it that you would tread with caution sectorally?
Sectorally, I would say we would still be concerned about some of the global businesses, including the exporters. I think that's where the business itself is still under some sort of a transition, I would say, depending on where the tariffs would head, where US growth and Western world growth is going to head. You're going to see a business momentum changing. So to that extent, I think there are too many moving parts as far as those businesses are concerned. While we do hold some of those positions in our portfolio, we are unlikely to really build upon those positions at this point of time until we get more clarity.
Okay, Harsha, stay with us. Lots more to talk about. But Hyundai Motor India Foundation, in collaboration with Samarthanam Trust for Disabled and the Cricket Association for the Blind, has organized a 5-day international bilateral blind men's cricket series, Samarth Championship for Blind Cricket 2025. This series is between India and South Africa men's blind cricket teams. India has won the championship, happening currently at the Sai Krishna Cricket Stadium in Bangalore. This championship will be setting the stage for the year-long campaign Samarth by Hyundai that is coming soon on the Times Network. Let me take it across live on ground where the closing ceremony of the championship is currently taking place.
Can we welcome him with a round of applause? And also, joining him, can we have the presence of our Honorable Minister, Social Welfare? We have Shri H.C. Mahadevappa in the house. Sir, Barbe Kunta Kelkunta Devi. Round of applause, please. And also the gentleman, a member of Parliament, Rajya Sabha, we have Dr. Syed Nasir Hussain to please join us for the presentation ceremony. We also have our very own legend, Mr. Syed Kirmani, to please join us for the presentation ceremony on stage. And completing the league to jointly present this set, could we have Dr. Mahantesh to please join us? We're going to start off with Player of the Match Award, the fifth of the 5 match series that we happen to witness.
All right, back to the markets then. Harsha, let me come to you and let me get your view on the textile space, if you track that closely, because if you look at that entire space, there seems to be a lot of upside that is still pending to take place in the textile space, given the fact that they've underperformed also pretty significantly. Do you think there is some sort of a valuation comfort? Are you viewing that space like that right now?
We have seen some bit of up move in the textile segment in the recent times, but there is a medium to long-term opportunity coming up in case India, on a relative basis compared to some of the other competitors from South Asia or Southeast Asia, happen to have a tariff rate which is lower than some of those peers vis-a-vis peers in case of US exports. If that were to happen, I think there is going to be a large opportunity that can be captured by Indian textile manufacturers, and also the margins are going to be relatively better in that sense. So yes, there is a medium-term opportunity in front of us, but we need to see how some of these tariff discussions go and where it would settle, not only for India but also for some of the other peers, from the Southeast Asian region. So overall, we continue to monitor this, and once we have more clarity on the overall tariffs in this sector, then we would probably take further view.
All right, so that's the take coming in on textiles. On that note, thank you so much, Harsha, for joining us in the show to give us your view on the sectors that are looking good right now, and which are the sectors that you actually can actually avoid at this point in time, given the fact the markets have actually rallied quite a bit and the valuations could be a cause of concern. As of market, as of now, if you can see it, it is trading flat with a negative bias. Let's actually head across to the event once again.
We request the dignitaries to stay back on stage. Kirmani sir, you can sit back and enjoy the rest of the presentation ceremony. We want to give you a bit of a rest. And to join us for the next set of awards, giving away the biggies, Player of the Series Awards. And to join the presentation league, could we have Mr. Prakash Padukone to please join us for the next set of awards. Let's welcome him with a round of applause. Come on, keep the energy going. Clapping is absolutely free and it keeps us energized. All this happening right here at the Sai Krishnan Cricket Stadium. And now it's time for the Player of the Series Award, B1 category. Again, it's India-South African team. It goes to Team India, Devraj Pal for his 5 innings, 4 wickets. और एक मजे की बात ये है that he is the youngest of the players in the team. Let's welcome the youngest team player. Devraj Pal, the Player of the Series Award for B1 category. We request Devraj जी एक सेकंड रुक जाइए, एक बात करनी थी आपसे. कैसा लग रहा है?
सर पहली बार मुझे प्लेयर ऑफ द सीरीज मिली है, मैं बहुत खुश हूँ, बहुत अच्छा लग रहा है.
और आप तो एक बॉलर हो, बॉलर के नाते आपका जो कीपर के साथ वो कम्युनिकेशन रहना चाहिए, वो बहुत बहुत इंपॉर्टेंट होता है. तो इस सीरीज में तो 3 बार कीपर चेंज हो चुके हैं, तो वो कम्युनिकेशन कैसा रहा?
देखिए हमने बहुत दिन, जितने भी दिन प्रैक्टिस की तो अलग अलग कीपर लगे थे, तो मुझे एक्सपीरियंस हो गया था कि किस कीपर के साथ कैसे एडजस्ट करना है.
Very well. Thank you. Congratulations. A huge round of applause. And now moving on, ladies and gentlemen, player of the series in B2 category. This goes to the man in 2 innings scored 153 runs, took 1 wicket and was part of 4 dismissals, and also got his maiden century to cement his place in the team, Sonu Rawat. Sonu is not here, so we request the captain to please step forward to receive the award. Maiden century, not an easy task. Can we put our hands together and convey our wishes to the upcoming star, Sonu Rawat? Durgaji, instead of Sonu, one question to you. Now that he scored a century, are you going to give him a permanent space in your squad?
No, not like that. Not like that. No one place is fixed because, some of our main players has been rested. So we have given him the opportunity. I think he has used his opportunities. Whoever got the opportunities, not only him, in the team, they have grabbed with both their hands. So it's been a good, I think it's Indian cricket was there in good phase. I think it's been a huge task for the selectors to select a squad for next series.
Absolutely a Herculean task. Thank you so much and congratulations. And now moving forward, ladies and gentlemen, we want the biggest round of applause for this one. Player of the series in B3 category. Put your hands together. This time it's Indian player or our South African player? I think the question itself gave you the answer. It is from our guest visiting. We've got the player of the series. Put your hands together for Lavande Bidla in the house. For his amazing 4 innings, 91 runs, 1 wicket and 1 dismissal. Lavande, if I could request you to stay back. He's in a hurry to get to his teammates and celebrate there. But if I can just have you for a moment right here and if you could talk to us. First of all, how is the experience of you playing this fantastic ground right here in India?
It was very, very tough, very hot. We were very tired and but it was a very nice experience. I think I learned a lot from the Indian team. Hoping that we'll continue learning a lot from the team.
All right. You come from a lineage which is known for fielding. You've got a couple of best fielders' names that to yourself. How was fielding on this particular pitch and ground?
Yeah, it's tough because I think we got too many injuries. Yeah, so it's tough, but there's nothing you can do. You said you are a player, so you have to do your best and give what the team needs.
Absolutely. In India we say, these marks are the real trophies. There we go. A huge round of applause. And now, while the cheer goes on, congratulations to all the player of the series. And thank you, Mr. Virat, for doing this. We request you to sit back and we want you to stay back for a couple of more minutes. And the other as we have the main award, runners and the winners. And to give this away, to join the league, can we have Mr. JT Park to please join us back again on stage? And also requesting Sadhguru Shri Madhusudan Sai Ji to please join us back for the runners and the winners trophy. And now also request the presence of Mr. Syed Kirmani to please join us back and to take the ceremony forward. Could we have Kirmani sir back on for the main trophies? We will be giving away the runner and the winners right here. Join the presentation league, sir. And now, ladies and gentlemen, the final moment. It's time for the runner-up. As we know this, it's concluded with 5-0, but the grit, the courage, the unshakable spirit that was displayed by South African team. Can we give a big cheer for the entire team? and call the runner-up captain of South Africa. We have Teboho Moloisane. Make some noise for the captain. Congratulations to the entire team. Let's give it up for our Atithis, our guests, the fantastic South African team one more time. Teboho, if I can just have a word with you. So in India, we are strong believers of Atithi Devo Bhava, which means guests are our gods. Hope you had a good hospitality and time here in India.
Oh, yes, indeed. We had a great time here in India. So, yes, we enjoyed ourselves.
So if there is one major learning or one thing that you take away from this series, what would that be?
As the betting side, we saw that the Indians, they betted well. So we're going to just take that home. So we'll just improve ourselves.
All right. Thank you so much. It was a pleasure hosting you. Give it up for the entire South African team one more time. And the captain. And now the moment we've been waiting for. It's the time to lift the winner's trophy right here at the Summer Championship for Blind 2025. Ladies and gentlemen, everybody in the house, put your hands together for the winning captain. 5-match series, won it with emphatic victory. 5-0, Durga Rao. Before we hand over the trophy, we need to talk to the captain. Yes, in the center. Captain, 5-0 is emphatic, comprehensive victory. But in the midway, anywhere did you think, because I put that point across, like, they are guests, they've come here to play. Did you think like, okay, let's play a little slow, let them, or was it like, no, we are competitive, we are challengers, we're going to play clean cricket and not going to give any leeway. Was this thought there anytime?
Yeah, absolutely, absolutely. We want to be more ruthless, but at the same time be humble also. So I think we have to give the credit to all the squad who has been there. I think they has been fantastic. Who have got the opportunities, they have done pretty well. I think you see, as I mentioned, we have given rest for some of our players, and we have chosen the players who have done phenomenally well in the domestic season. So I think they have done well, and for this we have to thank our coaching staff also, especially we want to thank our coach Ibrahim sir, because see, it's not easy for the young players come straight away to Indian team and perform. I think that's mind of space and that motivation or whatever need they want. I think that whole credit goes to sir. I think boys performed well, but at the end of the day we have to give credit to our coach sir also.
Absolutely. As you said, you're playing with a young team. Half of your mainstream team is not there. They're rested for this tournament. You had the young boys. Are you happy or you're happier about par? Did they meet your expectation or did they blow your mind altogether?
No, more than my expectations. I think, see, I don't see anyone came for first match and score a century. I think you can talk about Sonu very well. I think the way he had played yesterday, I think 40 balls, he has scored the century. Mark my words, the next big thing in the world will be Sonu Rawat, because he is a fantastic player. No backdrops in him. I think he's a fantastic player. I think...
Back to closing trades right here on ET now, and we're headed in for quiet consolidation. That's how we have been for the better part of today's trading session after that big bang move that you had in the equity markets yesterday. The good thing, like I said, is for the better part of today's trading session, at least we've attempted to cling on to that 25K mark. Let's welcome on board our experts then. We've got Jonathan Shizel joining in on the fundamentals, Kunal Potra on the technicals as well. Joining in on the show right now, and we've got Arpit Beriwal as well joining in on the charts. Kunal, hi, afternoon. Let me come to you first and get in a quick take, because yesterday's move, while we've attempted to hold on to 25K mark, it's largely consolidation. But would you say that 25,000 could actually act as a little bit of a floor, or does it seem a little bit of a tall task?
No, I think so. Good afternoon, first of all. I think 25,000 broadly should act as a floor for the Nifty. So, the last 2 days, when you look at this in the context, yesterday was a clear, outperforming kind of a day for large cap names, where you saw a slew of large cap stocks across the board, variety of sectors making a very strong comeback. Today, I think it's classical mid cap and small cap day because you just look at the number of stocks which are, showing double digit kind of returns, 10%, 15% kind of returns. Most of these stocks fall into that kind of a category. You look at the advance decline ratio, it's almost 2:1, 1800 advances towards 800 or 900 declines. So even that indicates that the tilt is more towards the mid cap names today. But then in the entirety, when you look at the last 2 days of price action, it tells you that this is an excellent kind of a market condition, because with every pause in the index, you're seeing that the pause doesn't happen into the market breadth and the momentum continues. So bullish on the markets, 24,800, a very strong support now from a short term, keeping that as a stop loss. Traders should hold on to the long positions.
All right, so that's Kunal who's saying that he is bullish on the markets. 24,800 would be a key level to watch out for. Good afternoon to you, Jonathan. Good afternoon, Arpit, as well as Kunal. Jonathan, let me come to you and get your view actually on the markets, given the fact that a lot has transpired over the course of at least 15 days. You've seen actually the sentiment turn rapidly and sharply for the markets. How are you gauging investing in such a volatile environment?
I think it's best said in one word, which is difficult. It's obviously whipsawing all over the place. Markets sentiment clearly had got very negative across the board. Retail sentiment, institutional sentiment. And I think, it's quite likely we have reached the so-called peak tariff is probably behind us. And therefore the market was open for quite a powerful rebound, which is certainly what we've seen thus far. I mean, we're now higher than the so-called Liberation Day announcement. So we've seen a good rally. Sentiment now is probably a little bit extended to the upside, or sort of pushing up from neutral up to overbought, or sort of looking a bit high. So I think markets clearly have done very well in the short term, but probably do need a phase of consolidation now.
Right. So talking about the fact that now you're seeing a consolidation in the markets, Jonathan, which are the sectors one should watch out for? Do you think that the entire narrative or the theme that everyone was talking about over the last 2 months or so, that it is time to look at domestic-oriented sectors, that theme, that strategy remains?
Yeah, I think I'd agree with that. I think clearly where we are in the cycle, the macro cycle within India, a bit more of a domestic focus actually would make sense. But I would say also, the outlook broadly for the emerging market complex looks quite positive. And if we do see some substantial foreign inflows from that will obviously also push up the larger cap sectors as well. So but I think looking at where India is on the macro sort of journey, domestic probably does look best.
Okay, Jonathan, stay with us. Lots more to talk about with you. But Arpit, hi, afternoon. What is your stock bias like? What are the sectors which are showing signs of leadership if the market were to move up further from here?
Very good afternoon to all. So we have seen a very classical day of broader market outperforming today, whether the mid cap or the small cap indices. So from a sector specific, a lot of sectors have in momentum. So top two sectors would be in favor would be the realty and auto sector. So if we see realty, auto have so far underperformed, but definitely going forward, we can see some bounce back from the lower levels. And within the realty, couple of counters that are looking good on charts is one is Loda, second is DLF. So after a long time, we have seen some rebound from the lower levels, and as we have seen consolidation on high levels, so sector rotation is likely to continue. Reality would be a preferred pick. Along with that, auto sector also, especially the two-wheeler space, are looking very promising. That is Hero MotoCorp and Bajaj Auto. From the lower levels, a strong support zone, turning from a sort of support zone, rebounding from lower levels. Risk reward is quite favorable. And from a medium-term perspective, definitely we can see a good momentum of 10 to 15% in both these counters going forward. So these two sectors we are quite bullish on.
Realty and auto sector is the one that are looking good on the charts, but on the fundamentals, then would these sectors make the cut to you, according to you, Jonathan, auto as well as realty, because both of them have their fair share of ups and downs, given the fact that also what matters is the consumer sentiment?
Yeah, I mean, realty, we tend to shy away from that particular sector just for our own, it's just how our process works. So I won't sort of comment on that one. It's a very localized sector. But certainly autos has been, as you rightly say, has been a difficult sector globally. Obviously, India has a slightly different story going there. Yeah, look, if domestic consumption is going to pick up, particularly rural consumption, and obviously we're going to see a few more interest rate cuts, et cetera, down the tracks, then the two-wheeler space probably looks pretty decent. Would agree with that.
Right, two-wheeler space would look a little better, but realty would be the sector that you'll not watch out for or rather avoid at this point in time. Kunal, let me come to you and let me get your view actually on the IT space. Given the fact that this one has had a very rough patch, do you think that things are getting better, at least on the chart front?
See, what was happening, Cheryl, over the last many weeks, that the IT index was extremely oversold. Now there was a point where TCS, Infosys, HCL Tech, etc., many of the large cap IT names and even the mid cap IT stocks, they were down almost 15% to 20% broadly from their 200 moving averages. Over the last 1 week, 1 month or 2 months, from their I think April lows to be precise, these stocks have seen a good bounce. But I believe that the first major material impact which was there of these stocks being divergent from the long-term averages and then trading into deep oversold territories, that relief rally has come into the IT stocks. Now, a relief rally gets converted into a new trend where there is a set of positive news flow which comes into sectors as well as individual stocks. As of now, it's still, is a bit of a catch-22 for many of these IT names in terms of news flow. That's why you're seeing that these stocks suddenly take a pause after a couple of days of rally. So net, my sense is that maybe the IT stocks from here on, at least over the very short term, may not get back into the thick of extreme momentum. There should be a phase of a time-wise consolidation unless the news flow starts to become positive for these stocks. Only on that basis, I would believe that I think one should look out for anticipation a breakout for these IT names. But I think other than that, I would actually expect the sector to underperform when you look at this in the broader context of how the markets could behave.
Jonathan, is that your sense too? Avoid sectors wherein there is uncertainty. We don't know which way the US economy is going to head, although it seems like there's going to be truce now on the tariff front. But it's not done till it's done. So avoid globally linked sectors for now when it comes to India markets?
Yeah, look, I think I agree with most of the comments that we just said about the IT sector there. Clearly there is a lot of uncertainty, and even if something's done, it can be undone 5 minutes later. So that's the world we live in, and I think businesses have to prepare for that. And unfortunately, if you look at the likes of Accenture and some of the other big IT players that are listed, elsewhere, they have come off a long way. There is a bit of a rebound going on in some of them from oversold levels, but at the end of the day, we still have some headwinds and uncertainty going on for the sector. I think medium term, the sector still looks good to our eyes. So we do have exposure there. But yeah, in the short term, I think these sectors which are overexposed to noise will probably be whipsawing around for a little while longer.
So that's about the IT sector, the medium and the short term actually view coming in for that one. But let's get on board, Ansh, to tell us how the IT sector fared in the quarter gone by. Ansh, over to you.
Firstly, ICICI Securities has collated this data on IT, and as per them, Q4 was a mixed bag for IT sector with muted growth, weak guidance and margin pressure. But let's talk about it in detail. Now, starting with revenue first, top 5 IT firms saw an average dollar revenue decline of around 1.8% sequentially, whereas Tier 2 names like Coforge, Emphasis and Persistent actually showed stronger momentum as compared to Tier 1 stocks. Discretionary spending lending stayed weak, especially across retail, automotive and manufacturing sector. Now, if we talk about guidance, then we are seeing that in report they have mentioned that Infosys gave one of the weakest ever guidance, just 0 to 3% CC growth, whereas Wipro has given a Q1 guidance which is negative. And apart from this, if we talk about other stocks, then we are seeing that KPIT, Signed and Coforge has actually suspended their FY26 outlook. So overall growth visibility remain uncertain in here. If we talk about margins, then we are seeing that margin for top 5 players has declined by around 44 basis points sequentially on an average basis. Whereas if we talk about AI trend, then AI is now part of most of the client deals, offering around 20 to 40% of cost saving, and firms are actually tying up with OpenAI, Nvidia, Google and others to deepen their capability. So lastly, if we talk about overall thing, then the bottom line here is that while tier 2 IT firms and AI adoption provides some hope, the sector continues to face headwinds here. Weak guidance and delayed hike highlight the cautious mood as FY26 begins here.
Right, that's that on the IT sector and how it's performed vis-a-vis the earnings. But let's get you an ET Now exclusive. And we understand that JSW Paints has signed an exclusivity pact with Axon for the decoratives Dulux Paints business. Anurag Joshi, my colleague, is here with more details. Anurag?
JSW Paints is in an exclusivity pact with Axon the Dutch paints giant, for the possible purchase of the decorative paints business, which is the Dulux brand in India. Now, this exclusivity pact gives JSW Group an edge over the other rivals in the transactions, which are Indigo Paints, which is one of the key paint makers in India, and that's tied up with Advent International, which is a private equity player. And then there's another bidder, Pidilite Industries. Now all the bidders, JSW, Advent, Indigo and Pidilite, they all have binding agreements signed for the deal. Now, just to give you some kind of a background, in February, Axon NV, which is the Dutch parent, they had made an offer to acquire the powder coating operations, and that also includes the industrial business of the Indian unit. So, and they transferred the power coating operations and the research to the Indian subsidiary. Now, this rejig helps the Indian unit to be sold to a successful bidder whenever the deal concludes. Now, this transaction has been going since last year, and in the past the bidders who have looked at this asset have included private equity firms like Blackstone.
All right, thank you so much for that, Anurag, for getting us those details on the Axon JSW Paints story. Coming to you, actually, Jonathan, what's your view on the paint sector, given the fact that there's competition and only rising competition that has impacted all these legacy players, the likes of Asian Paints, or for the matter of fact, Berger Paint? We've seen that also impact in their earnings. What's your take now going forward? Would you go ahead and bet on the space?
Yeah, I think the situation in India is more complicated than I think outside India, where we've seen a lot of consolidation. Clearly, the likes of Asian Paints historically had fantastic margins, huge market share. And obviously, as you rightly point out, we've got a lot more competition entering the space to start chasing some of that. I think there's good structural growth in the space. It is an interesting space, but it isn't great when you see a lot of competition coming into the space. And that just obviously doesn't help margins. So I think in the short term, probably it is still a bit stressed, but obviously if this deal that we've just talked about goes ahead, then that's potentially the first steps in a little bit of consolidation. But for the moment, probably too much competition, margin pressure from various factors. So probably one to sort of avoid in the very short term.
Right, okay, that's that on the paint segment right now. I just want to mark some of the other movers. And what you're seeing is, while defense, of course, as the pack continues to hold out, there's a renewed vigor that you're seeing in the entire PSU pack. And one such segment amidst that is also some of the railway stocks. Look at Titagarh, for instance. And if you can just bring up the 2-day chart for you, because both yesterday and today, in fact, today the stock is sitting on a double-digit gain. You're seeing a big move on this. Look at Nircon also, for instance, 6.5% higher over there, and the rest of the pack as well is looking mighty charged. Kunal, anything that's looking good for a trade within the railways pack, or does it seem like this is just a very short-term move? Look at a Titagarh, for instance. It's a big breakout on the stock.
Yeah, it's a big breakout, and Aisha, I look at it this way. The stock was almost at 1800 plus in 2023-24. From there, the stock corrected to I think around 600, 700 thereabouts for Titagarh, and the stock is now almost at 900 plus levels. Which means when you look at this in the context of the price correction has been severe for these names. So there's bound to be a point where the relief rally could be more V-shaped and more sharp. But I believe that many of these stocks are offering good opportunities for traders. And the best chart apparently is IRCTC. And after almost I think a gap of more than 8 months or so, the stock is for the first time confirming a breakout of its 200 moving average. It's trading closer to that 800 levels for IRCTC, and that I believe could change the texture of many of these railway stocks going forward. Because in the previous trend when in 2024, there was a point where IRCON, IRFC, RVNL, these stocks gave returns of 3x, 4x. IRCTC had been a huge underperformer. I think the prospective chance for IRCTC from here on is that the stock could now cover up the huge underperformance. So that's something which I would want to bet on at current levels.
All right, so that is about some of these counters in the railway pack. But what are your BTST ideas, Kunal?
So I'll go with two buy calls. The first one is NBCC, something which I've been bullish on earlier also. Would suggest a buy even at current levels, targets of 116, stop loss at 107. And Bharat Forge is also inching towards a 200 moving average breakout. So 1330 as a target for Bharat Forge, stop loss at 1230.
Arpit, what about you? What are your BGST ideas?
We have two ideas. So one would be from the exchange space, MCX. So MCX is a strong uptrend, a classical range breakout on the daily and the weekly scale, a strong bullish candle. So MCX would be a first BTST idea, currently quoted on 64.50 with a stop loss of 63.50 for an upside target towards 6600, 6700. And second would be from the reality pack, that is the macro tech developer. So overall, reality stocks are seeing good bounce back from the lower levels. And if we see the chart setup wise, on the weekly scale, a classical range breakout above 1380 levels, closing above the same. So definitely we can see good 3 to 4% move in coming session. So macro would be a second idea with a stop loss of 1350 for an upside move towards 1460 levels.
Jonathan, what is your own sense on this entire defense sector wave which is currently at play? Sure enough, these stocks did very well till about 2 years back, and then that October correction played out here in India equity markets. But now, because of the geopolitical tensions and again, what transpired at the India-Pakistan border, once again, you're beginning to realize that some of these names got to be in your core portfolio. How are you viewing this entire sector?
Yeah, I think you're correct. I think, we've entered into a new era of a lot of global uncertainty and, as you say, geopolitical pressures building up substantially. And I think certainly when you look, perhaps not India, but elsewhere where defense spending was cut back to the bone, a lot of these defense companies globally have enjoyed a renaissance in orders in the very short term. Obviously, the companies themselves have a slight problem in ramping up capacity and production, which takes time. But I think you're right. I think, overall, the sector has plenty of room to carry on running. Governments are not going to suddenly be cutting back on defense spending anywhere, in my opinion. And therefore, it does have a long runway. The only slight hiccup, I guess, are traditional defense stocks and companies the right way to play it? Or do we have to look at sort of some of the new technology that's evolving extremely quickly? It's not necessarily about very complex, large, expensive weapon systems. Suddenly, much smaller, much more flexible drones, et cetera, are different ways. And finding ways to play that is probably, the key going forward.
Right. Let's take a look look at some of the stocks or the sectors that are actually ending the week on a high, if you look at the metal index, that's set for a biggest weekly gain in about 4 years, given the fact that you had the US-China trade truce. You also have the realty in sector that is ending or is headed for the best week since September 2021. You have the broader markets that have seen spectacular gains in this entire week, where the mid-cap index has seen a jump of about 7% or so. You have small-cap index that is set for the best week in nearly 5 years. I'm talking about that, actually, Jonathan, talking about the entire broader market frenzy that we saw, a sharp correction at play for the broader markets, but a lot of hopes now riding on that this one will see a bounce back much sharper than the benchmark indices. At least this week's data also indicates that.
Yeah, absolutely. I mean, I think clearly, what's happening, it's obviously much more of a domestic investor focused area. And, with you'd hope that with the economy basing out and the government beginning to do more fiscal stimulus and other measures that money will come back into the market, domestic money come back into the market, and yeah, it will focus on the smaller areas, which should do well.
Just looking at some of the laggards as well today, although they are relatively lesser in number, but regardless, Bharti post that block deal, of course, has been skewed down about 2.5%. Technology, of course, has been one big sectoral laggard led by HCL Technologies, Infosys, Wipro. They're all laggards today. L&T as well has been largely quiet, and that's been the case with M&M as well. Arpit, map out the charts for L&T for us, because after the earnings, you did see a dash up, but largely L&T has lagged its other large cap peers.
If you see overall the large cap stocks, L&D, if you talk about it technically, a strong rebound was seen from the lower levels pre the earnings season and post that. Now it is at a crucial junction near around 3650 where the fall started. So I think near its right now it's near its hurdle zone. But looking at the overall chart setup wise, 3650 would be a key level to watch out for. More momentum can be seen above 3650 for 3750 levels. On the immediate basis, 3550 would be the immediate support zone for the stock.
All right, so that's the take coming in on L&T. Let's talk about the power sector, because power demand is on the rise, and that's very evident from the data released for the week gone by. The demand has soared by about 12%, and heat wave has gripped the part of the nation. The government so far has met the demand, but are we actually prepared for soaring temperatures in the weeks ahead? Prakash is here for more on that. Prakash?
Yes, there is a sudden jump in power demand in the month of May so far. The peak hour power demand has risen by more than 12% in the last 1 week, primarily due to surge in heat wave across the country. As per the Power Ministry's data, approximately 30 gigawatt of power demand was met during the day on May 15. The peak hour power demand jumps to 223 gigawatt from 199 gigawatt in the last 7 days. However, no power shortage has been reported in any states during peak hours, and that's an important development coming in as there is a surge in power demand, and despite surge in power demand, there is no power shortage across the country. There are some minor shortages in states like Madhya Pradesh, Haryana and Puducherry. Significant jump in power generation as well from all sources like hydro, thermal, wind and solar. The Power Ministry is estimating that the power demand, peak hour power demand may cross 270 gigawatt during ongoing summer season, and therefore government has prepared an emergency plan to meet any surge in power demand.
That's that and the surging power demand and what the stats are currently throwing up. In the meantime, the laggards, the usual suspects like we've been saying, SBI, Axis, L&T, Titan, they're largely flat in trade, as is the case with M&M. Bharti, of course, has been a laggard today. And then IndusInd, even though it's recovered from the session lows, it's still down about almost 0.6% as we speak right now. When it comes to banks in specific, Jonathan, would you stick by with the larger cap private banking names, the stocks already close to all-time highs? Or would you say it could make sense to perhaps look at some bottom-up plays within the, the government-owned banks as well?
Yeah, look, I mean, so from our perspective, we have tended to only really focus on the private sector banks. I was looking at the charts of ICICI Bank earlier. It's been a phenomenal performer. We're still long of the stock. We're happy with the stock. Yes, it's done well, and there will be periods where it will underperform. But we have faith in where the private sector banks as a whole are heading, and the opportunity going forward. So still happy with banks. We still think it's a good play, and obviously, if there's more short-term trading going on between the private sector and the public sector, it's not what we do, but obviously, I can understand that some people do look at that.
All right, so that's the view coming in on banks. On that note, thank you so much, Jonathan, Kunal, as well as Arpit, for joining us on the show, taking us through the market strategy and the sectors that are looking attractive at this point in time. But as we wind down for